Welcome back to the channel, everybody. So the banking industry is in big trouble. It's in much bigger trouble than I thought. But now that I have an update on it, I was flabbergasted. I'm going to drop this information on you. I actually went old school and printed the information. You see the document that I printed right here that I put together, right? It's titled, sorry about that, it's probably reversed on the camera, but it's titled An Assessment on the Current Vulnerabilities in the U.S. Banking Sector. This should blow your mind. Now, and it also paints a clear picture as to why bank coin companies like Ripple, like Hedera, etc., even Solana now. You saw what happened with Solana in the banks? Did you see that? So Solana is keeping its word. It is a true, tried and true bank coin company now. But let's get back to the point. I believe these are some of the reasons they're so confident that they're going to dominate the banks. They're going to take that bank money, and it probably is going to be easy. Things have gotten much worse. Let's jump into this now, okay? So first, let me read this little tidbit to you. Strap yourself in for a ride. It begins here. The U.S. banking sector, while demonstrating some resilience, faces several interconnected vulnerabilities. Remember that resilience is artificial, it's fake. They pumped up the liquidity, they changed the rules, etc. If you remember what happened with the FDIC, and then they ran out of money at that particular, not ran out of money, but they ran out of supportive capital for the banks after that collapse that they had. I believe it was in 2023 when those banks went down, Silvergate, SVB, all that stuff like that. Then they changed everything around. And then in the past, they said they weren't going to bail out the banks. But then they very quietly, although we exposed it on this channel, then they created another thing that was another facet to what they do that was pretty much the same as a bailout, which we covered on the channel. And the banks kept doing what? All the way through 2024. They kept borrowing that money, or not borrowing, but utilizing that money. I don't even know if they had to pay it back. But we covered that. So there's all of that was propping them up. So let's keep that in mind as we go through this information now. But it says there's several interconnected vulnerabilities that could precipitate bank failures or runs. Now, one of these aspects that I'm going to drop on you from this document right here, keep in mind that stable coins only exacerbate that problem. Stable coins only make that problem worse. They need something that's going to prop up the stable coins and stop that problem from happening. Don't worry about it. We're going to get to it. So it continues on. Underscore the system's sensitivity to rapid shifts in interest rates and depositor confidence is another thing to keep in mind. How many people do you know that actually trust the banks? Do you trust the banks? A lot of people are holding their capital in gold and a lot of other things, a lot of other ways other than the banks. They don't trust the banks. And it's been widely reported. Well, it used to be. Now it's just they keep it quiet. Why did that get buried? They used to report on deposit flight. I covered that for like a year and a half. Deposit flight, massive deposit flight. That's something to keep in mind as well. Let's keep going. This report examines, by the way, if you like this video at any point, please click that like button. Click that like button. This report examines the current and emerging problems confronting U.S. banks in 2024 and 2025. Here's key takeaways. First bullet point. I beg your pardon. Key takeaways. Unrealized losses. Unrealized losses continue to haunt them. Says unrealized losses in banks, securities portfolios, while not directly impacting regulatory capital unless realized, significantly erode the underlying equity cushion. This makes regional banks with a high proportion of uninsured deposits particularly susceptible to confidence-driven withdrawals. That's key. Confidence-driven withdrawals. When that happened before? Remember when it happened? When all those banks, it was the first domino of all those banks collapsing at that particular time with the whole SVB, Silvergate, and there was a few other ones. Then in that summer, like 2-3 more banks collapsed quietly. Remember that? That happened. That began with confidence-driven withdrawals. It started with the big money. The big money rushed in. It was like the winter of that year. The big money rushed in and they were removing capital. Then all the regular people heard about it. They rushed to the banks and caused bank runs. Bank runs can happen even easier now and into the future as they adopt certain new systems if they don't involve those native tokens for liquidity. They need that liquidity. They need a liquidity like XRP to back up the stable coins. And at the same time, they need stable coins because the fiat currencies are weak. They're all weak. Right. But let's just concentrate on the dollar. The dollar wants to continue to dominate or be, strong and respected. It needs stable coins for it to go forth out into the world and continue that dominance. It needs. They said it a bunch of times. OK, so you need stable coins, but at the same time, stable coins are not stable. The BIS put out a bunch of documents about that. So you can go read that if you want. Stable coins are not stable, but you need a stabilizer. XRP and coins like that can provide massive amounts of liquidity. Now, especially now that they've reported institutions are interested in these things, they can provide liquidity. So they are the stabilizer. So they are necessary. This is the secret. They're not telling people the importance of these native cryptos. So when you think about it like that, how does XRP stay low? It doesn't stay below $4. There's no way. No way it stays below $4, $5, $6. There's no way, in my opinion. It's not financial advice. I'm not here to convince you of anything. These are my thoughts. I speak only for myself. But there's no way, once you think about that it can remain that way. I mean, you tell me your thoughts on this. Let's continue to build. Now, let's go here. I'm trying to get back to my spot. Bear with me. Okay. Confidence-driven withdrawals, which can rapidly force realization of these losses. That's all it takes. So you mean it? This is merely one aspect, of course. And yes, I'm a little excited. I love news like this. This is money-making news. I don't know when, because I don't know how long they can prop up the systems. But I've seen the weaknesses. I've been hinting at it. I've been talking about it. Now we're diving deep. That's all it takes. Confidence-driven withdrawal. That could be shaken by anything at any moment. A few things will take off. First of all, long term, the bank coins are super bullish. That's number one. Number two, gold would skyrocket, which also leads me to recall to my memory all of these massive. Have you been paying attention? Do you make it to those last chapters where I talk about gold? Have you heard what they're saying? There's some very massive predictions about gold lately. I'm talking about way beyond anything I could have thought or fathomed. And I was questioning why. When we get to the part where we're talking about percentages and numbers, you're going to understand. We get to that second page, you're going to understand. If you're enjoying this video so far, you find it informative, click that like button. Maybe they're looking at this and they know for certain massive amount of banks are going down. And that's why they can say there's no other apparent catalyst to say, well, gold's going to this extremely high price, $6,000. And these are legitimate companies. All right. There must be a solid catalyst for them to say that. And it can't be central bank buying. But let's get back to the crypto. We'll talk about the gold another time. We're on to something hot right now. Second bullet point, the substantial. You thought they solved this problem? They didn't. The substantial volume of maturing commercial real estate debt, coupled with prevalent, quote, extend and pretend strategies. Wait, let me pause right there. Did you see the articles that came out lately? They're extending. If you go on Google right now, type in something like banks extend loans into, how did they phrase it? It was a phrasing. Just like banks extend loans. News today, or banks extend loans far into the future, something like that. Look at the articles that pop up. Reuters should pop up. Okay? And take a gander at that article or those articles that pop up. They know there's a problem. They're trying to push it down the road until they can maybe come by way of a solution, which only happens through the bank coin companies. That's the only way it happens. The interoperability, the global reach, the liquidity. We're talking about global liquidity from everywhere. They can get global liquidity from the retail aspect, from the companies, from nations, everywhere. They know it. But wait, let me keep going. So, The substantial volume of maturing commercial real estate debt, coupled with prevalent, quote, extend and pretend strategies, delays the recognition of potential losses. I told you. This creates a looming credit risk, especially in the struggling office sector, which could necessitate widespread loss recognition and capital shortfalls. Next bullet point. Now, I want to see if this is the one. Yes, folks, please listen to this one. Share this information. Next bullet point. The speed of digital banking significantly amplifies the potential for rapid deposit outflows, transforming traditional bank runs, which happen very quickly. Remember, we lived through a couple of them. Traditional bank runs into, quote, flash runs that demand immediate and robust liquidity management and robust regulatory oversight. Liquidity management. Where's that going to come from? Where's that liquidity going to come from? Have they solved the bank run problem? No, they haven't. But they're walking into a system where if we're not including the liquidity that the native tokens can bring to them, or those who have a large amount of the native tokens like Ripple could provide to them if they start to act as liquidity providers, right? I mean, out for the banks, of course, and I think that they will. If we're negating that, how do they solve that problem? So you mean to tell me that they're just walking into a spider's web with a much bigger spider? No, they have to have a can of Raid or a black flag, the spray, like for insects, in their back pocket. What is that solution? The solution has to be the native tokens, the liquidity, the reason why they were included in a digital asset stockpile, the reason why they're so respected all of a sudden out of nowhere, which we know that's not true. It's just the truth is being unveiled for the first time. Flat with bank runs. I'm telling you, this might be easy at some point. I don't know when. That's the only thing. The timeline is this is the biggest question mark right now. So now let's get into some numbers. Hold on. Wait, let me just get this page. Put that over here. So now financial vulnerabilities. Let's look at some of the numbers. Okay. Aggregate unrealized securities losses. Q4 2020, only Q4 2024. $481 to $483 billion. Unrealized, next one, unrealized losses percent of aggregate equity, Q4, 2024%, 19.9%. Banks with unrealized losses greater than 50% CET1 from Q4 2024, 34 banks, greater than 50%. Commercial real estate debt maturing, $957 billion. What? No, what's the solution? RWA tokenization? Oh, that value is going to flow. They already talked about it so many times. They're going to fragment everything and sell everything in sight. Largest banks with CRE exposure, commercial real estate exposure greater than 300% of equity. 59 banks. That's just the largest. It's a domino effect. There's contagion, as they say. It will touch those 59 will touch others. But here's the thing. You look at the actual list of banks that are in trouble. These are just the most extreme. They put out the numbers just for the most extreme. It makes it look like there's a little. There's not. There's thousands of banks in trouble. We looked at them personally in the members only section. So long while ago, we probably need to do an update on that soon. Okay, so now I have so much more. There's like 12 pages of this. If people are clicking that like button and it looks like they enjoyed this video, we'll come back to this. There's much more information we could uncover. I dug up a lot of stuff, but here we need to get to a little bit more news. All right, so now let's jump into a little bit of this. Bitcoin news. It says, here's the article title. Why Bitcoin skepticism persists even as mainstream adoption grows. Well, let's be very clear here. You're saying mainstream adoption. when right now is mainstream media, have any of you seen mainstream media making a huge push, a positive push for Bitcoin? Have any of you seen it like consistently every night? Is that on the news? I wouldn't know, but I haven't heard of it, but maybe it's taking place. But if it's not, this is not the mainstream push. By mainstream, I take it that you mean the institutions are buying, nations are buying Bitcoin and making plans with Bitcoin. Then that makes a little bit of sense. But let me read this instead of me just speaking before we get into the article, right? Bitcoin has been embraced by BlackRock and the U.S. government, but skeptics remain. There's nothing, even if that's the case, there's nothing that anyone can do about that and nothing they should want to do. In my humble opinion, everything it looks like is going well without that aspect. So what is there to do? Early Bitcoiner Adam Back shares his take on why. It says, with everyone from Wall Street giants like BlackRock to the U.S. government getting involved, the leading cryptocurrency is now more mainstream than ever. You can even buy burgers with it. So it begs the question, why is it still so hard for some people to understand and accept conditioning? They've been conditioned. You got to understand, a lot of humanity is very traditionalist. It's very conditioned. Whatever they learned early on in life, that's the way that it is. Even if new information pops up, it's hard for them to accept it. Is one of the biggest contradictions, one of the biggest dichotomies that humanity has within them. And unfortunately, humanity is dichotomies. Is a dichotomy in its experience of life. But change is the only constant. That's what I wanted to get to. So they don't like change, even though one of the most consistent truths, or if not the most consistent, is that change is the only constant. So you have this dynamic of humanity where if they learn Bitcoin is bad, right? They're made afraid of that. They remember that in their minds, the reptilian part of their brain, if you believe in such. And they don't want to tread into that territory. That what they learned, that's it, is that it has become crystallized. Even though they should know, change is the only constant. So how do you remain the same or do everything the same or remain in the same position, the same thinking, if you know that the natural flow of life is that change is happening every second to your body, to your mind, to the crypto industry? There's always going to be that dichotomy, but some people do adapt, but a lot of people don't. The ones who adapt are extremely special. The ones who learn and understand learning is ongoing are very special. Very, very special. It says here, so it begs the question, why is it still so hard for some people to understand and accept with the traditional finance heavyweights like investor Warren Buffett and JP Morgan Chase CEO Jamie Dimon slamming the asset? It appears that some people will never be open to Bitcoin. Yes, there's also historically always been a controlling aspect to some people of humanity. A lot of leaders of humanity, they oftentimes have been the most cold-hearted. They're bullies, and that's why they make it to the top. People fear them. They're ready to do what other people are not ready to do. So in that as well is a control aspect. They like to control the people, and you don't maintain your control through change. You maintain control through keeping things the same. You don't want to upset the apple cart. So yes, people like this, although they will fill their pockets with Bitcoin, even if it's by way of proxy, they don't want to change whatever chains they have on the people that they influence. They love that power. They love it. This is just my humble opinion, folks. No disrespect. It says, speaking to Decrypt Blockstream CEO, well-known early Bitcoiner Adam Back, said that this is nothing new and that even techies struggle to get their head around cryptocurrency. Well, it's not just crypto. It's a lot of things, but the world moves forward anyway. Despite anyone who doesn't get on board with the forward momentum of the world moves forward anyway. We build better rockets. Some people don't like rockets. We build it anyway. Some people didn't want to stop riding in horse-driven carts, but we built vehicles, automobiles anyway. Some people don't like quantum mechanics. I've met them. They don't like it. But quantum mechanics moves forward in their estimations and theories and algorithms anyway. Everything moves forward despite. So let's continue to move forward. Bitcoin is going to take off whether those people get on board or not. That's their loss. In my humble opinion, that's their loss. There's nothing you can do about that. I wouldn't cause myself stress. I wouldn't lose any sleep about that. We have ourselves and the ones that we love in front of us. Let's keep moving forward. We hold hands with them, the people that we love. We keep moving forward in strength. Strength has to focus. Strength has to continue moving forward, advancing. It's just the nature of us. But anyway, it says calling continued skepticism confusing. Back use the example of cypherpunks. Example of cypherpunks back in the day who seemed uninterested in Bitcoin. Does it mean cyber? Maybe that's a typo. I think it means cyberpunks. I think it says he thought it was, quote, or is this an individual he's referencing? I'm confused. I'm not sure. But it says cypherpunks. He thought it was crazy, quote unquote, that some of them didn't get on board. Quote, you understood all about code, peer-to-peer networks, privacy, public key cryptocurrency, and secure sockets layer, unquote, he added. Quote, like you have a huge leg up in understanding this and you're not interested? What gives? Once again, intelligence does not equate to wisdom. People can be highly intelligent. I've met many, many intelligent people, but some lack wisdom, right? There's a very, very distinct difference. That application of intelligence, actuating upon it, and all the different other aspects that you have to incorporate to make movements in the world, progressive forward movements that, is actually beneficial. Not everyone has that, although they can know much. They can know much. So let's continue on to another article, but that's interesting though. But once again, I just want to point out, Bitcoin has gotten to where it is already without that. It doesn't need it, to each his own. So now this next article, let's see, that was a little bit of Bitcoin news. Let's do a little bit of Chainlink today. A little bit of Chainlink. We haven't talked about Chainlink in a while. Doesn't mean I'm not bullish on it because I didn't speak on something for a long time. No, my bullishness remains. I have a lot of different assets that are like that. I'm super bullish on them. I barely talk about them anymore. Now, decentralized Oracle network Chainlink continues to top real world assets sector in recent development activity. This is coming from Santiment. You know what else? I realize I have no idea how long this video is. I was just flowing. Holy smokes. I have no idea how long this video is. But I hope you enjoy it. I hope you enjoyed it. I hope it was informative. The decentralized Oracle network Chainlink continues to dominate crypto's real world asset sector in terms of development activity, according to the analytics firm Santiment. Little error in my chest. Just bear with me one quick moment. Santiment notes in a new post on the social media platform X that Chainlink registered 532.43 notable GitHub events in the past 30 days. The figure far exceeds the second-ranked RWA project, the Layer 1 blockchain Avalanche, which clocked 290.87 GitHub events. The peer-to-peer payments project Stellar, XLM, big dog, one of the big dogs on the block, was third with 240.7. Keep it going. Keep it going. All right now. Chainlink has occupied the top spot on Santiment's list all year, often clocking multiple times the number of GitHub events as the second ranked project. All right. Chainlink, like I told you before, I think is greatly underestimated. I don't know why, but I'm super bullish on it. Just my humble opinion, not financial advice. All right. They've been doing a lot of great work. They have some of the most mind-blowing partnerships, and it hasn't stopped. You go on Google and type in Chainlink partnerships 2025. They've been working their tail, or Chainlink projects. They've been working their tails off. All right, so now let's go to a little bit of gold news. A little bit. See what's happening with my absolute favorite, most reliable asset. Gold has so much potential, and we found out some other commodities have potential as well. So now, gold weekly price outlook. Gold has a strong week. The gold market has been strong during the week as we continue to see upward pressures in this market. Ultimately, this is a market that looks like it's trying to get to $3,500, but it might not be easy. That depends on the catalyst. I'm going to say that right. The catalyst, keep an eye on them. You're going to know a lot. Gold markets weekly technical analysis. The week has been pretty good for gold as we continue to rise overall and see a lot of upward momentum based on a plethora of reasons. I should have just said plethora of reasons, not the least of which would be the fact the US dollar is starting to lose some of its strength. Nice. Nice. With that being said, I think you have to look at this as a potential buy on the dip type of market. That's their opinion. Like a lot of people bought a ton of gold long time ago. But that's what they're saying here. And I do think that gold eventually goes looking to the $3,500 level. It doesn't mean that there won't be problems along the way. I agree with that. This person sounds like how I speak sometimes. Because it's true. There's going to be problems, and you have to let that be known, because a lot of people, I don't know why, they feel like if things are going good, there shouldn't be a problem. No, there's life. But let's keep going. But I think life is going to throw you a curveball any chance it can. Murphy's Law, anything that can go wrong, it probably is going to go wrong. I paraphrased the heck out of that, didn't I? But I think at this point, $3,200 has shown itself to be a fairly significant support. We're most certainly in a massive uptrend, and with the US dollars shrinking a bit, or at least showing cracks. And at the same time, we have geopolitical issues as well as questions about the global economy. It all lines up quite nicely for gold. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.